troughs into the market we remain. Over to Leanne Jones at Bell Direct. So Leanne, welcome to the show. Risk on, you got a feel for it overnight. We got momentum as well. So this is a very nice trend we're seeing, is it not? 10 sessions of gains.
Absolutely, Carson. Really another very strong performance we're seeing today, following that strong performance yesterday after the RBA cut those rates. And as expected, I think we were continuing or expecting to continue seeing this strong performance today. We, of course, saw markets around the region and around the world really surging. Those energy sectors continuing to push higher as those oil prices are looking like they are stabilising, continuing to increase. And, of course, coming out of Greece, it does look like some of those debt problems are looking like they may be restructured, and some of that instability is coming to a bit of an end. So I think all of that really adding to our market today. But looking at the best performers, obviously the energy sector, materials and financials, as you have said, we did see mostly higher commodity prices overnight. Iron ore up 1.2%, seeing Atlas iron surging, as you mentioned. Aluminium was up about 1% and copper up a huge 3.5%. And of course West Texas oil up about 7%. So really continuing to see a surge there. As you mentioned, those banks continuing to perform strongly after yesterday's significant turnaround. Quite interesting, though, we are seeing that telco sector under a bit of pressure today. It is the only sector in negative territory, down about 1% or so, and we're actually seeing Telstra coming off a bit, down about 1%. Quite interesting, given that given the cut that we saw yesterday, a lot of those high-yielding stocks were going to be in focus. So potentially the rise that we have seen recently in Telstra may have been a bit overdone, but really continuing that strong performance today. Volumes will be interesting to watch. We saw they were very strong yesterday, so it will be interesting to see whether we get the same today, but the 10th consecutive day of gains, as you say.
Looking at Bell's call on Echo, meanwhile, and also it's worth just pulling up shares which have unwound by about 2.25%. You've called this result solid, I know that, with, interestingly, VIP the main driver, but mass gaming a little weaker. I'm wondering how this company is going to differentiate itself from Crown when it comes to Barangaroo, because if that is the case, don't they need to be making a bigger play on mass gaming?
Potentially, Carson, as you say, I think they do need to start differentiating themselves a little bit. As you say, we did come out with that call saying the result did look fairly strong across those profits, their revenues, their earnings. As you say, VIP gaming was very solid. And, of course, coming out of the Sydney Casino, so the Star Casino, we saw our revenues and earnings very strong there as well. So it will be very interesting. I think what we're seeing that negative reaction to today is in terms of their outlook. So they are saying that those volumes across the second half are only likely to be stable or relatively flat from the first half, so no growth there, and I think there is a bit of concern there. In terms of the actual space, we do like or think that the gaming space is attractive given those stable returns and, of course, the leverage to China's growing wealth, but we actually prefer the likes of Crown and, say, Sky Entertainment within this sector as opposed to Echo Entertainment. Obviously, Echo Entertainment is very heavily focused in terms of Australia. They have spent a lot of capital expenditure in terms of the refurbishment of that Star Casino. Of course, we're seeing some relatively weak growth coming out of here and high unemployment, so there is a bit of a concern there in terms of Echo. Crown, on the other hand, has been diversifying itself a little bit more, and it's avoided some of those headwinds in Australia, obviously, by focusing on its expansion within Macau. So it is certainly interesting. We do prefer Crown over Echo. As you say, they will have to start differentiating themselves. It will be interesting coming into the second half of 15.
A thought now too on Independence Group completing a planned shutdown of Jaguar operations. Where to next?
So they have released that. They've also released their February investor report, and both of them were really confirming what we heard out recently in terms of some of their strong production at all of their operations and also exceeding that guidance. So the outlook, I think, looking fairly solid. As you mentioned, they have completed the shutdown at that Jaguar operation. That was actually 1 week ahead of schedule. So that was fairly positive. I think that's why we are seeing that strong performance in the share price today. In the short to medium term, I certainly think there is a risk there in terms of those falling commodity prices, of course, cost pressures, and also that weaker demand coming out of China. But longer term, we actually do remain a bit more optimistic on this stock. They, of course, are diversified across a number of those commodities, so gold, nickel, copper, and, of course, zinc as well. So that should certainly help them in terms of that falling commodity price environment. Potentially some corporate activity, some M&A on the horizon. We know that they are starting to look at new opportunities and expecting that they will actually start to generate some pretty solid free cash flow growth over FY15, and that should help to translate into higher dividends. So they're actually in quite a strong balance sheet and financial position. So certainly longer term, we actually do remain optimistic on the stock, despite potentially a bit of headwinds in the short to medium term in terms of those commodity prices.
Thank you, Leanne. We talk to you soon.
Thanks, Carson.
All right. Leanne Jones from Bell Direct.